Jason had always been cautious with his money. He worked hard as a marketing associate in Chicago, saving diligently, but he knew that simply keeping his earnings in a savings account wasn't enough. Inflation was eating away at his money's value, and he had heard countless success stories of people growing their wealth through investing. But every time he looked into the stock market, it felt overwhelming. Charts, numbers, risks, and financial jargon he didn't understand. One evening, while scrolling through an article about financial independence, he came across a quote from Warren Buffett. "The best investment you can make is in yourself." That's when it clicked. He didn't have to be an expert overnight, but he could start by learning. Determined to take control of his future, Jason began researching the basics of investing. He learned that the stock market wasn't just a place for the wealthy. It was a tool that anyone could use to build financial security over time. He discovered index funds, ETFs, and compound interest, realizing that he didn't need to predict stock prices to succeed. He just needed patience and a solid strategy. At first, he was hesitant. What if he lost his money? But then he found reassurance in the words of Peter Lynch: "Know what you own and know why you own it." He didn't need to chase quick gains or follow trends. He just had to invest in things he believed in and understood. He started small, opening a brokerage account and putting money into a diversified portfolio. Rather than trying to time the market, he followed the advice of legendary investor John Bogle. Time is your friend. Impulse is your enemy. He set up automatic contributions, letting his investments grow steadily without emotional decision-making. Over time, Jason saw progress. He wasn't making millions overnight, but his money was working for him. He finally understood the difference between saving and investing. One preserves wealth, while the other builds it. Jason's journey into investing taught him 3 key lessons. 1. Start small, but start now. The earlier you invest, the more time your money has to grow. Even small contributions make a big difference. 2. Think long-term. Markets rise and fall, but historically, patient investors have seen consistent growth. Stay committed. 3. Educate yourself. Knowledge reduces fear. Understanding your investments gives you confidence to stay the course. Now, Jason no longer feared investing. He embraced it. Because the truth is, you don't need to be rich to start investing, but you do need to start investing to build wealth. So what's stopping you? Follow for more.